This podcast is part of the Spoon Podcast Network, home of smart conversations that feed your mind.
What if the way we cultivate and fund our global food system could save us all? I'm Eva Goldborn, and welcome to Everything But the Carbon Sink, a podcast that delves into the exciting and sometimes messy intersection of food, climate, and the money that could change everything. Here with me today is Jessamine Fitzpatrick, co-founder and managing director of Alder Capital Management. And today we'll be diving in with her into the intersection of capital and climate solutions in the food system and opportunities for scaling high-impact interventions, in particular with private capital, and how it can play a critical role in addressing climate, water, biodiversity, and rural prosperity. So Jessamine, thank you for joining me today, my friend.
Thank you so much for having me. I'm thrilled to be here.
Thank you. And I'm excited for this conversation too, because again, as I just mentioned, you represent private capital in this space. And as I've been going through this podcast, exploring all the different capital stacks. So now we've arrived at the private investment bus stop to learn a little bit more about some of the nuances and quirks there through Alder Point. So I'd love to hear from you, just to start us off, what led you to co-found Alder Point Capital, your focus on impact-driven investment, and in particular, some of the investments and work that you do around your investment thesis.
Great. Well, again, really glad to be here and happy to be talking about something that's near and dear to my heart around private capital and climate and environmental solutions, and especially how they touch communities. So hopefully we'll have a chance to touch on that too. So I'd say just in terms of context and at a high level, Alder Point is really sort of the culmination of about 20 years of experience working at the intersection of land management, financial solutions, and environmental outcomes. And my partners and I all went on a similar journey before we launched Alder Point, and I'll share a little bit about that. For me personally, I started my career at the Nature Conservancy, where I was working mostly on large-scale conservation projects, bringing public dollars and philanthropic grants to those projects. And time and again, I was sitting across the table from private timber companies and farmers and talking with them about how they could improve the stewardship happening on their properties. And I sort of realized that, there were limitations to the public perspective and resources that I was bringing, and that the economic incentives of those private landowners, really private capital providers in their own right, was what was driving their decision making on when to harvest trees or what crops to plant and how to manage those crops. So around 2010, I pivoted to the private sector and ultimately ended up working at a family investment office with my now co-founders at Alder Point. And the three of us worked together to build out a commercial scale investment portfolio focused on real assets, so farmland and timberland, as well as real estate. And the mandate that we had from our client at that family office was to deliver positive, strong financial returns for the portfolio from a commercial perspective, but also to deliver environmental and social impact outcomes in the places where we were working. And so we had to get really creative because there actually were not a lot of solutions available to us in the market, and there weren't a lot of managers that we could partner with at that time. Yeah. So we went on a journey together at that family office and spent a lot of time working on creating solutions to acquire assets and then manage them to a different trajectory. Really very proud of the work that we did there together as a team, and ultimately launched Alder Point because we saw an opportunity to bring those learnings and insights to a broader set of investors and to scale our personal professional impact beyond what we were able to do within a single family office context.
That's helpful. And I'm curious too, when you were working at the family office, because I realize I didn't ask you this before, what was their personal motivation to have that focus on additional impacts? Because that's not always super common, especially back during the time where you were working with them. What was their motivation to give you that mandate?
Yeah, I think that the family that we were working on behalf of, and I'm going out on a limb a little bit speaking on their behalf here, but some of the sort of founding impulse thinking was really driven by having grown up in a rural community, having worked on and lived on a farm, and understanding that there is a deeper connection between people and natural communities that we need to foster, and that in the current environment, economic environment, social construct here in the US, et cetera, we've really sort of moved away from that unification between people and nature. And so I think there was a goal of aligning wealth and resources with values that related really to sort of that connection, and most importantly, or not most importantly, but I think uniquely interested not just in the environmental outcomes, not just in how much carbon was sequestered or what landscapes were protected, but also how the people that interacted with those places were participating in those outcomes and were encouraged to engage in sort of the long-term trajectory of the assets and resources in their communities. And so it was a real privilege to be able to work on financial solutions that had both that environmental and social component.
Yeah, and really like the ultimate trifecta too, in terms of those are the people that you want to be able to mobilize large investments who really understand the additional non-financial impacts that they have the capacity to influence. I'm curious too, as you have evolved now into Alder Point in particular, one of the things I'm excited about and learning from you is you focus not only in the agricultural context that I'm often thinking about, where it's just farmland, you work within timberland as well. How does that, what are some of the considerations, or how does that sort of differ from the way that some of us may be thinking about food and ag production in the traditional farm context, and what you're thinking about that in addition to timberland and forests?
Yeah, I think as land equity investors, we see a lot of similarities between production forestry and production agriculture. Both take place in rural parts of the United States and globally, in fact, and often take place in the same community. So, in the upper Midwest or in the Northeast, you also often have productive farmland side by side with productive forest land. And my partners and I all come to this work from that sort of landscape scale conservation perspective and understanding. And I think what we're looking to achieve through Alder Point is delivering transformation of management across, millions of acres of land. And so you can't really deal with farmland and ignore forest land, and you can't ignore forest land. You can't do forest land investing and ignore agriculture. Both deliver commodities into our markets, and so in some ways, offtake can be quite similar, and the ways that we interface with supply chains and buyers of our commodities that we're producing on our property, that can be similar, and the interventions and tactics can be similar. Production agriculture is quite resource intensive, as you well know, results in a lot of direct emissions into the environment. And so, there are really important direct emissions reductions that can be done in agriculture around upgrading irrigation systems and transitioning away from fossil fuel based energy toward more renewable energy resources, et cetera. That's not as present in forestry, but the things that are similar are conservation at scale, restoration opportunities, particularly along water courses, and reduce runoff and pollution in water courses that abut farmland and timberland. And I think, the potential for these natural resource lands to sequester and mitigate climate impacts long term. So, sequestering carbon in forest biomass, trees, and potentially long-term sequestering carbon through improved soil management, of course, as well. So lots of similarities. And I think from a financial perspective, we see real assets, timberland and farmland, as a really important, playing a really important role in an institutional or large-scale investor portfolio. And they both offer similar financial benefits in that portfolio. So things like inflation protection, downside risk protection in the form of land that often always sort of carries its value even through recessionary periods, et cetera. So some different tactics in how we manage these assets, but broadly speaking, a lot of similarities.
Thank you. And maybe even building on that too, if you could do some myth busting, because oftentimes we hear ag is so risky. And, when we're dealing with these natural systems, or they're just not as profitable as, I should just invest in some SaaS platform or, hardware or software. You spoke to this a bit in terms of, the value of land, sort of keeping track with sort of natural inflation. What are some of the misperceptions that are in this space around investing in real assets like timberland and ag that are just simply not true and that sort of excite you and your team to continue to invest in this space?
Mm-hmm. Yeah, I mean, I think that sometimes when we talk about investing in agriculture, we conflate as different aspects or multiple parts of the supply chain. And I would argue that investing in offtake and food processing and consumer products is a much riskier part of the supply chain than investing in land and the productive aspects of an opportunity set that land itself offers. And there are certainly land investments that can be quite risky. Something that we as a team think a lot about, informed by our 10 plus years of experience working in this space, is climate risk. There are certainly a lot of people, I think today, say, oh, timberland, why would I invest in timberland if it all will go up in flames in a wildfire? And certainly in a lot of parts of the US, we need to be very mindful of wildfire. Just like in other parts of the US, we need to be mindful of drought and aridification in farmland impacts. But there are ways, I think, to use new technology and even historical fire and drought patterns to understand where our capital should be going today and to really be thoughtful and careful about managing that risk so that we don't have loss of value in the future. So, for instance, our team focuses a lot on the coastal areas of the Pacific Northwest, both for agricultural production and timber production.
My favorite part of the world.
Yeah, beautiful part of the world. I love going there. That's the best part of my job, of course. But lots of rainfall and, very productive soils and high value crops, whether those are tree crops like redwood or berry crops like blueberries. So we think a lot about managing climate risk and where the intersection of climate resilience and land management practices and regenerative offtake markets kind of all come together. That's not everywhere. So I think, people need to be thoughtful about that. And then circling back to the first thing I was saying, I think sometimes agriculture investments are looking at multiple aspects or playing in multiple parts of the supply chain. Maybe there's a strategy that buys the land, produces the fruit, brands the fruit, and then delivers it to the retailer. What we're talking about is investing in land that can produce multiple different types of commodities. And so there's some inherent risk mitigation in that approach because we're not focused on a single crop or a single offtake market, but rather offering our investors some diversification and long-term productive value.
And on that front too, when you're making your investments, I guess one, it would be great to hear from you an example of one of the investments that you've made, just to sort of, provide that concrete demonstration for us. Because again, your work is different than some of the other conversations I've been having for the podcast too, where you're literally investing in land, in physical spaces, and not, portfolio companies that provide solutions in this space. So one, even just to hear from you, an example of those investments, and then I have several other questions based on the brilliant things you just said.
Yeah, of course. Try to make it a little bit concrete, right? So
yes, always.
Yeah. So I think one of the reasons that my partners and I continue to be drawn to equity investments in land and ownership of land as a financial strategy in this space and in this kind of movement towards more scaled regenerative stewardship of land assets is because a landowner really can integrate a lot of different strategies within one asset. And so as an example, in the past, we've acquired properties in the Pacific Northwest. We were just talking about what a beautiful place that is. And these properties that we acquired historically had been sort of underutilized from a food production perspective. Maybe they were growing low value green beans for canning, or even grass seed for turf grass. So not really high value or high nutrient content potentially into our food system. We acquired those properties and ultimately ended up establishing permanent plantings on them. And in the Pacific Northwest where we were working, we were primarily focused on blueberries and hazelnuts as the two crops that we focused on. And then, in the establishment of those higher value crops, we needed to think a lot about how we were going to manage the crops. And so we developed the property with very high efficiency irrigation systems that reduce the use of water on property. We also innovated or used kind of newer technologies through the irrigation system, fertigation techniques to reduce inputs, application of crop protectants using technologies that were relatively innovative to again reduce inputs. We also implemented cover cropping between the rows of plantings to help with water infiltration and reduce soil erosion and generally improve the quality and health of the soil between the rows for long-term production. And ultimately, our goal here was to transition from sort of an underutilized asset to a much higher value, higher cash flowing asset. By implementing a whole suite of different practices and technologies. And going even beyond that, working with local partners on conservation outcomes, so selling off small pieces of the property along river courses to ensure that ecosystems would be improved, planting native pollinator habitat, and adjusting our pest management strategies to really reduce impacts on pollinators. As a well-capitalized landowner, we were able to implement this kind of whole suite and integration of strategies that is regenerative in nature, can help support more organic production, reduces inputs and is more efficient. And so, we see a kind of key role that type of landowner can play. And then I would just say, lastly, the way that we manage the asset touches on the social impact piece that you and I were talking about at the top of the conversation here. So we partnered with farm management companies, a couple of small companies, to manage the assets. And actually, these were two entrepreneurs just starting out. They've been farming on behalf of other farm management companies for decades, but had just started out because they wanted to transition their management services to more organic and more regenerative practices. And by partnering with us at the scale that we were deploying capital, those management companies were able to scale and hire their own teams. And so
that must have been a dream come true for them.
I mean, I don't want to give ourselves too much credit. They put in a ton of work. But I think we approach our work by thinking about how do we build that frontline local capacity that extends beyond our acres. And that's so important, right? Because if we're only thinking about managing our 100 or 400 or even 1,000 acres and not what's happening on the neighboring properties and not how we can extend our learnings to the neighboring properties, our impact will always be limited in scale. Yeah. And by supporting that local economy and those farm services companies, we feel like it's a really important key role that we can play in terms of helping scale more practices on more acres.
Yeah. And sort of helping me understand too, the acquisition that you do of these parcels of land. I guess first question is, and in the example that you shared, it was being used for existing agricultural purposes and you were sort of, transitioning to higher value cash crops. How often are you simply improving existing timberlands for timberland, ag for ag, or transitioning in one direction versus another? And then second question, beyond sort of like how much of that effort, where it seems like you're extremely integrated into both the acquisition and then the actual management. Where does Alder Point start and end in terms of the continuation of production once you acquire the land?
Yeah, great question. So I would say what we're experienced at as a team is investing in a lot of different types of assets, and what's appropriate and going to be delivering financial value for our investors on one asset will differ from the other, depending on its historical management and use and what's possible from a production, agriculture, or forest perspective in a particular place. So you asked how often are we, I think, repositioning assets and developing something completely new versus transitioning management. And I would say we're somewhat agnostic about those two things. I think we're always looking for ways to improve the management and the cash flow on properties. And sometimes that means transitioning from, a monocrop or, 2 rotation grain crop to a more diversified rotation, and transitioning from conventional production to organic production, but driving by a field that might continue to look relatively similar to what was happening before we bought it, versus, in the example I gave before, obviously establishing new permanent plantings is quite different than what had been happening on a property previously. So we're doing both, and it will really depend on what's possible in a particular place. And again, where that sort of climate resilience, opportunity for climate mitigation, and local capacity all kind of intersects. So it's place specific. To your second question, which I'm now forgetting. So can you help me out?
Yeah, let's see. What was I was asking
where
about,
does our management kind of start? Our role start.
Your individual role. Because as you were describing it, I realized it was way more comprehensive than I had previously understood.
Yeah. We are very hands-on in the approach that we take. And we think that that's really important because we work with investors who are well capitalized. We're deploying capital on behalf of sort of institutional or high net worth investors who are looking to see strong financial returns from their portfolio. And we think the best way to achieve that is through active management. We do that, of course, in very close partnership with a lot of different folks on the ground. And that includes the farm management companies that I described earlier, but also a whole host of other partners. So conservation organizations, research organizations, even other capital providers like lenders, for example, we might partner with at the exit of a property. If we're selling a property to an operator who ultimately is using leverage to buy that property from us, will want to be working with that lender to make sure that they understand what they're underwriting. We're providing good data to them. So we touch a lot of different parts of the agriculture economy in a place. And I think what we've learned from our experience in the past is that a lot of farmers on the ground, particularly farmers who are innovating, are looking for thoughtful partners to share the risk and to innovate and absorb production risk and innovation risk in the right place. And what I mean by that is a lot of the farmers we partner with already have a home farm where they're exposed to commodity price risk and production risk, et cetera. And it might be difficult for those producers to innovate because they're somewhat capital constrained.
Sure.
And then if they work with us on our properties, we typically are paying sort of a fee-for-service arrangement or compensation that can look a lot like a salary on an ongoing basis. And in those types of arrangements, we're providing some stability to a farm operator. And we work very closely in partnership to ensure that a business plan that we co-create can be implemented over time. And so when we're underwriting or looking at a property to acquire at the front end, we rely very closely on those partnerships to make sure we understand what's possible and what a more regenerative or organic system might look like on a property. After we acquire a property, we'll start working through that business plan in very close partnership with the farm operator on the ground. But we don't expect that operating partner, that's what we're sort of generally refer to our partners on the ground as, to do everything. They are great at growing whatever crop they're experts at, right? And we're partnering with people who are also great at marketing those crops in their local markets. We don't also expect them to understand how to implement a conservation project with a local NGO partner. And we don't necessarily expect that those farm operating partners certainly have the capital to implement more energy efficiency upgrades on their irrigation systems or in their cold storage. Right. We bring that analysis and that capital to bear to the partnership. So view it very much as a partnership.
Yeah, thank you. And sorry, just to deepen that point a little bit too, how do you create your sort of fabric of partnerships and those additional stakeholders that you just described in terms of, the farm operators seem to be the most logical ones to identify. Do you have sort of like an existing network or a process that you use once you're in a new geographic area to understand, like, okay, is it World Wildlife Fund that's here, or Nature Conservancy, or like, where are just those other technical providers possibly? How do you identify those and build those relationships?
I think this is a key differentiator for our team relative to
it's very unusual
conventional managers, right? There are other farmland managers in the market who've been in business for a long time and serving their clients well. I think our willingness to go into communities and really get to know as many people as possible and what the role of those people in the community is sets us apart. So there is a lot of time spent walking fields with farmers and other stakeholders. We spend a lot of time talking with, like I said, researchers, and talking about ways that we can use our property as a pilot, for example, for some research projects. I think that goes a long way. Talking with other community stakeholders. I mean, something that we don't often talk a lot about in agriculture investing, but I think is really important to keep front of mind, is people who work on these properties in rural communities need a safe place to live. And we think a lot about the housing in the communities where we're investing, and in fact have upgraded and added housing to our farm properties sometimes, because we think that's such an important aspect of risk management and providing that kind of safe place for that community capacity. We're very fortunate because as a team, we've been doing this work for so long. And so there are places where our networks run extremely deep, on the West Coast in particular, in California and parts of the Pacific Northwest and some parts of the upper Midwest. In new places, which is something you asked about, it takes a lot of time to build those kinds of relationships, but we try to be very broad about it. We spend a lot of time visiting people in their offices, having meals together, driving properties, like I said, and that sort of trust building is a key part of my job, and I think a key part of what I'm offering to investors to deliver value.
And on that front too, and thank you, that really is a great example, and I agree with you, a very unique value proposition of what you do in like a truly strategic investor and strategic partner in this landscapes framework, instead of just in these, very transactional, just sort of at the farm gate. When you are sort of looking at these partners, and as you're saying, and I think I'm going to have to invite myself on one of these little tours, especially if it's in the Pacific Northwest, dinners and walking farms. Sounds magical. And I'm curious, on the philanthropic side, do you ever do sort of like hello grants or something that allows you to engage a technical assistance provider or nonprofit who's working in the space to, they're not necessarily part of your traditional investment portfolio, but you clearly understand the role that they play? How do you interact with them, possibly on a financial level?
Yeah, I think one of the things that's really exciting about where we are today versus where my team and I were maybe a decade ago is just how many different types of potential partners there are on the capital side today. And there are philanthropic organizations, there are private lender organizations, and other private equity investors like us that might have a slightly different strategy. And I think our awareness of and relationships across the spectrum really serve us well in terms of being able to bring those partnerships to bear where they might be needed. So for example, I was talking earlier about how we're very focused on investing in the land asset itself, and we're sort of staying away from an integrated operating business or offtake part of the supply chain. But we also are keenly aware that investments in supply chain are both challenging and essential in terms of scaling up regenerative practices and commodity production here. And so we are always developing relationships with partners who might be able to support through a grant or some other maybe concessionary type of capital investment in a grain processing facility or a nut processing facility that will be the dedicated offtake for not just our commodity, but also the nut crop that's being grown on the neighboring acres as well. And so, there isn't always an opportunity to partner in a capital stack together because we are investing on behalf of private investors. Typically, we're looking for a commercial return, and we haven't been using leverage a lot, although that could be an option if we wanted to partner with PRI providers, for example. Yeah. But I think it's sort of more about the systems approach and how we look at the whole system and where grants are needed or where concessionary capital is needed to support other parts of the system that are not as, not capable of supporting sort of the financial outcomes that we think land assets can today.
Yeah, that's helpful to know and understand too, because that's often, I call it sort of like that connective tissue or that messy middle where there needs to be those other financial partners within that capital stack. And to your point, it's just out of scope simply for the function that you play in this space, but being able to partner with those, philanthropic entities to be able to, fill in the gaps there, in my opinion, really is what creates the difference between change and systems change. So I'm encouraged to hear that. I have maybe one or two final questions, and if you can believe it, we're just flying through this conversation. In terms of sort of looking ahead, you've obviously been in this space for a long time, and from what you've described has evolved immensely. What do you see as sort of the what's next in terms of either trends of not only just, we're clearly in the middle of a climate crisis and sort of these external and environmental components, but additional awareness of investors and sort of increasing demand from investors to invest in this type of space and sort of what you see as the evolution of where this type of private investment is going?
Yeah. I think certainly there's been an acceleration of interest in this space over the last couple of decades. And likewise, I think there's growing consumer awareness and demand, although it's not growing as fast perhaps as we need it to be. But particularly in some commodity types, like specialty crops, for example, berries, I think have really benefited from consumers understanding that conventional production can be really harmful, not just to the environment, but to their own health. And so I think that sort of growing consumer awareness offers a lot of opportunity or a reason for feeling optimistic about what's happening in this space right now. I also think just sort of the attention that's being paid to data and demonstrating that regenerative practices that are focused on improvements, ultimately focused on improvements to soil health, really are going to be what's going to sort of help us adapt to and mitigate the effects of climate change going forward. And I think the more that we can get sort of real time or current data across multiple crop categories, for example, and production systems in multiple geographies, that will really help accelerate investment into these practices because it will make rational financial sense to be using a different set of practices. And the more data we have, I think the more likely it is that landowners are going to be using those practices. And importantly, that other parts of the financial value chain will also be requiring those practices, whether those are lenders, providing loans on properties and requiring certain practices, or insurers. The sort of crop insurance system in the US is highly complicated. I know you're probably having some conversations in other podcasts about the current policy environment, but I think the more we can...
That's mind-blowing.
Yeah, the more we can be on the private sector side, supporting the collection of data and the provision of that data to demonstrate what happens with crop yields in a drought, or even a high precipitation event when you've been using regenerative practices, the more likely it is that those will be supported across the set of financial tools that are available in the market. So those are some things that I think have changed and are continuing to change, and that I'm excited about. Maybe I'll just share one last thing, which I think is pretty complicated, but an important thing to note about where we are today, which is, the farm sector in the US and like many sectors of the economy, I think is really struggling and will continue to really struggle for the next couple of years, and has struggled for the last couple of years. And that's a result of rising costs of inputs, challenges around trade and offtake pricing, and so on. And so I want to be really mindful of what it's like to be a farmer in America right now, and how challenging it can be in terms of ensuring that they have the cash that they need to support their families, and so on. That's been a challenge for decades here. But I also think that challenging time in how we've been doing things consistently for decades is maybe coming to a head, and that there is an opportunity in certain places to put properties on a different trajectory, and to identify that what we've been doing hasn't been working, and that this is really a time to lean into practices that decrease risk and support more consistent yields, and potentially even capture a higher value in the market, and especially in domestic markets. So it's an exciting time, even if there's a lot of pain being felt in the sector right now.
Yeah, and totally see that, just breaking out of that inertia of, as you're saying, sort of changing the trajectory of how land is managed, and the use of different types of inputs. It's shocking, even when there is the financial case, the business case to change practices, and this existential climate crisis, to break that momentum. And I guess, what is it, Isaac Newton that said, the things that stay in things that are in motion stay in motion, and how we just break from that, knowing that it's essential. And just that theme is coming up in a variety of conversations. So I so appreciate this opportunity to chat and learn from you today, and just thank you for such a great conversation. And thank you to our listeners for joining me for Everything But the Carbon Sink on the Spoon Network. I hope this discussion, and all the ones we have on the podcast, inspire you to think differently about the intersection of food, climate, funding, and the role we all play in transforming our food system. If you've enjoyed today's conversation, don't forget to subscribe wherever you listen to your podcasts, and share with others who also care about building a sustainable food future. So thank you, and see you next time.
Thanks, Eva.